Yeah, the commission was really at pains today in this building behind me to say that they're not walking back from the Green Deal. This isn't about deregulation. This is simply about a reframing to balance climate concerns with economic competitiveness. But environmental NGOs aren't buying it. There were big protests here, right where I'm standing outside the Berlaymont EU headquarters yesterday from environmentalists saying that this really amounts to European Commission President Ursula von der Leyen backing away from her signature Green Deal, which passed a raft of climate legislation during her first term, actually putting the EU in the forefront globally on climate action. There's been a lot of complaints from businesses about that Green Deal, and we saw actually in the EU election campaign last June that the Green Deal became quite toxic as a word. It was used in campaigns by the center right and the far right, saying that the EU has gone too far. So I think no matter what the Commission is saying, it's very clear that this does represent some level of walking back from the Green Deal. I think the question is how much and is it necessary? The thing that's really made people suspicious here is the specific legislative items that they're walking back. For instance, corporate sustainability reporting obligations. So that's companies having to report their emissions and their sustainability activities. They're now going to exempt 80% of businesses from that. Previously, all businesses were going to have to comply. Now, that legislation only got passed 4 months ago. So it's hard to say that the businesses are struggling under this mountain of red tape when any requirements about this law hasn't even kicked in yet, and it was only just passed. So from the political level, it seems clear what the Commission is doing here. They recognize that climate concerns have really fallen down the list of voter priorities as they have these more immediate concerns about war and peace. And they are responding accordingly. And they're also responding to the result of that EU election in June, when voters ranked climate as a low priority, and the Greens in the parliament, for instance, lost a third of their seats.
They're also, it seems, responding to the theatrics of the far right globally. What with the industry commissioner, Stéphane Séjourné, saying it's reform without a chainsaw, a reference to Elon Musk and Argentina's far-right president Javier Milei.
Yeah, exactly. I think there's trying to strike a balance here. There were a lot of questions at this press conference about whether this is all a response to Donald Trump basically halting U.S. climate action at federal level, taking the U.S. out of the Paris Agreement. They said no, but then they kept making statements, the various commissioners during the press conference, that were saying that this is being done because European companies need to be competitive with American companies. It's a clear reference to the fear that European companies have that they are and will become even more uncompetitive with their American counterparts that don't have to deal with climate legislation. Interestingly, the one thing that was supposed to shield European businesses from this, that European businesses were actually asking for, is this carbon border levy, essentially a tax that will be applied to imports from third countries outside the EU that don't have as stringent climate legislation. Now it's being speculated that that will probably have to apply to U.S. imports. Now the Commission is proposing to exempt 90% of companies from having to pay those import taxes. They say it's not going to make a big difference in terms of emissions because that top 10% of companies emit the most. However, that is a very big amount. So when you look at all of this, what they're doing, this is very, very significant, this rollback that they proposed today, and it's hard to really see how that doesn't amount to a drive for deregulation. And particularly, it's hard to see how it's not coming in response to the election of Donald Trump. Now, I will say a lot of this is in response to the competitiveness report that was delivered to the European Commission by former European Central Bank Chief Mario Draghi in October, so before the US election, citing concerns about European competitiveness. But it should be noted that he raised a lot of concerns in that report about what's wrong with the European Union, what's making Europe less competitive than other places such as the United States. These concerns about environment and climate legislations were a very small part of that report, I have to say. And the rest of the concerns that Mario Draghi raised, the European Commission doesn't seem to be in a big hurry to deal with those.
Stay with us, Dave Keating, because a further sign of the times coming from London this Wednesday. What with BP, the oil giant whose share price has been sagging of late, making a big announcement. Antonia Kerrigan joins us now. An about face And again, this is a similar mood music to what we were hearing out of Brussels.
Yes, so they're not the only ones doing what they're doing. Let me talk you through this announcement first of all. When you look back to, well, let's first give a bit of context. When you look back to 2020, their vision, they were industry leaders, BP, in terms of their green ambitions. In 2020, they announced their plan for net zero. They were going to reduce oil and gas production by 40% by 2030, and they plan that there will be no new exploration in new countries going forward. So this was quite radical for the industry at the time. However, fast forward a few years, profits took a 97% hit in 2024. That's not to say this company wasn't nevertheless extremely profitable for its shareholders. That was just much less profitable than the year before. So today the announcement we heard is that BP will be boosting investment in fossil fuels to $10 billion a year, and they will be cutting what they call transition business, so renewables, EV batteries and hydrogen to $1.5 to $2 billion a year. The words you were seeing in this statement with regards to renewables investment, things like disciplined, selective, focused, capital light, enormous euphemisms that essentially mean bare minimum investment in those sectors. And what is important to point out is this is part of a wider shift, as you were saying. Shell axed last year their plan to cut their carbon emissions by 45%. By 2035. They axed that last year. They said that such plans were perilous. Equinor more recently announced they were halving renewable investment for the next 2 years and upping oil and gas production. The justification they gave, once again, scaling down investments in renewables and carbon solutions because they don't see the necessary profitability in the future. That's the same thing we heard from BP today. This is a reset BP with an unwavering focus on growing long-term shareholder value. So a whole industry talking unashamedly, you might say shamelessly, about putting profitability above all else.
Has the planet gotten any cooler since they came to this decision?
Well, I'm glad you asked me that because what's changed is absolutely not the science. The last year was the hottest on record, etc. Scientists remain unanimous that the phase out of fossil fuels is absolutely urgent. But what seems to have changed is a shift in the zeitgeist. In an era of drill, baby, drill, they're dropping the act a little bit. We never expected oil majors to sacrifice profitability on the altar of the environment. We knew that would never happen. But for a while, their environmental responsibility seemed like a value add to investors, or at the very least, some greenwashing seemed like it might be useful. But now it seems like they're no longer living in fear of reprisals, of increasingly strong regulation or retribution. And NGOs are saying this is the definitive proof we've been waiting for a long time that they are unreliable partners. They cannot be trusted with the green transition.
And after that announcement, BP shares falling 1.85% on the London Exchange. Many thanks, Anthony Kerrigan. Just before you go, let's cross back to Dave Keating for a second, because Dave, you talked about the EU elections that took place back in the spring. Again, it's a far cry from 2019 when there was a green wave and when we were in the throes of those Fridays for the Future demonstrations.
Yeah, exactly. So much has changed since 2019, obviously. When Ursula von der Leyen first came into office, there were those protests that we remember with Greta Thunberg and all of that, and she was really saying that climate change was going to be a major issue. And she is from the center-right in Germany, and you had center-right parties all over Europe embracing the idea of fighting climate change. Flash forward after the pandemic, after Russia's invasion of Ukraine, and the momentum is just not with climate action anymore. And clearly we can see that in terms of where the public mood is right now, there is not significant political retribution or consumer retribution for politicians or companies that take these decisions. And they are noting that, and they're acting accordingly.
Dave Keating in Brussels. Anthony Kerrigan, many thanks for that.